What's up guys, Trader Judd here, back with another Forex video, and today's video is going to be about understanding support and resistance levels. So my thing with support and resistance levels is that many people have different understandings of support and resistance levels. And there is no right or wrong way to do it. I'm just going to go over the way that I approach support and resistance levels. They are a pivotal part of my trading, and I believe that if you're not utilizing support and resistance levels correctly, if you're approaching them incorrectly, this video will greatly help you understand and explain the way that you should be looking at support and resistance levels on your charts and how to draw them, and sort of the approach to using them, or why you should at least be aware of them if you don't trade off of them. So yeah, let's go ahead and jump to the charts. So when first talking about support and resistance levels, we have to know what support and resistance levels are. And when talking about support and resistance levels, you have to understand that price travels up to certain points, and once it reaches those points, it turns back down, and then once it reaches that the low point, it turns back up and down and up and down, and so on and so forth. But what are those levels called? Well, when price is traveling up, it reaches support, or excuse me, it reaches resistance, and then reverses and heads down to the next support level, in which it reverses, and then heads up to the next resistance level, which it reverses, and so on and so forth. Now, price will break through the support and or resistance levels once it's appropriate, or once it has enough momentum to break through it, meaning once it has enough money pushing it in that direction. So you can see that we're looking at AUD JPY on the weekly time frame, and you can see that price travels to certain levels and then reverses, travels to certain levels and then reverses, and you can go back in time and look and see that these levels are somewhat consistent. Now, it is important to point out that these levels are not exact numbers. So we'll see that for example, these levels, right, we have a test right here, a test right here, multiple tests right here, all throughout that, test right here, and then multiple tests over here, and technically a break and a retest right there. So those are all tests of a support and resistance level, and I say support and resistance because price is on both sides of this horizontal line. So if we go from left to right, price breaks through, so what was resistance now becomes support, heads up, comes back down, retests support, heads up again, comes back down, retests support, comes up, comes back down, retests support, comes up, comes back down, breaks support. So after 3 tests of this support level, it finally breaks back through support, and that support becomes resistance, comes back and retests that support and resistance level, and then drops. And you can see sometime later, comes up, comes down, comes up, retests that what has now become resistance, comes down, comes up, comes down, breaks through, or what was resistance becomes support again, comes all the way up, retests what is now support, retest, 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 breaks through support, comes back up, retests it, what is now resistance, not support, but resistance, comes down, and then comes back up and retests resistance again. So that's just one level of support and resistance that has been identified. And like I said, this is not an exact number, right? It doesn't have to be 89.561. It can be 90 even, or it can be 89 even, and it can be anywhere in that range, in between 89 and 90, or even a little bit higher than 90. So like 90.2 would be about the top and I'd say probably around 89 would be about the bottom of this, maybe a little bit lower. I guess you could come lower than 89, maybe 88.5 would be about the lowest that you wanted to go. But we'll keep it right at 89.5, somewhere in that range, for this demonstration purpose. So that's just one support and resistance level. We can look over here and see that this is another support and resistance level. Now, there's not as many touches on this support and resistance level because it's at a much higher point. Price doesn't travel up this high very often, so you're not going to get as many tests on this. You can also add one right there. Let's see here. Where else can we add some support and resistance levels? We can add one right there. Now we'll travel below where price is. We can add one right there. And then again, this is only on the weekly time frame. I will do, and I do, and we will visit this later on in the video where I break it down even farther, going to lower time frames, down to the time frames that you trade on. But it's always good to get a big picture view. So I always start, when I'm starting fresh on a chart, you always want to start on the weekly time frame. I don't start on the monthly because that's a little too big picture for me. There's just not enough data. It doesn't go back in time far enough to really be beneficial to do it on the monthly time frame. But it is beneficial to do it on the weekly time frame. And so let's just roll with these ones that we've got. We got 1, 2, 3, 4, 5, 6 support and resistance levels right here. Now, I'm going to, on the weekly time frame, I'm going to identify why we are highlighting these levels by how many times they've been touched or how many times they've been tested. So there's 2 touches on that level. There's a touch right there and a touch right there for that level. We have, I guess we'll just go left to right. There's a touch right there. I'm not going to consider any of these touches right here. We have a whole bunch of rejections right there. Another rejection right there. A few rejections right there. Touches or rejections, whatever you want to call it, whatever works best for you. I'm saying rejections just because that's the lingo that I use. It's what I'm comfortable with using. That doesn't necessarily mean that's what you have to say. Just know that touches or rejections, they mean the same thing. I'm saying rejections because if you'll notice on any one of these levels, you see primarily wicks. You either see wicks or you see this right here where it's a railroad, if you will, pattern showing clear rejection, but it happened over a 2-week time frame instead of just 1 week. And so if you were to look at a 2-week chart, this would look like a rejection or a wick on to this level. Same thing right here. This would look like a wick to this level. And actually this would be, well, it would be a wick. Alright, so now dropping down to the next level, going left to right, we can see that there is a rejection right there. It just happened the candle, or a couple of candlesticks before it actually broke through. We have a rejection, 2 rejections right there. Price danced around right there. I'm not going to label that, but when you see something like that, consolidation on a support and resistance level, price is indecisive on which direction it wants to go, so that's why you see that movement. Rejection right there, rejections right there, and then you can see this again, consolidation on the support and resistance level. It broke through, came back and retested right there, and as you can see, we can label this as a rejection as well because of that bearish engulfing candle, but that is also a rejection of that level. And then coming down to the next support and resistance level, going from left to right, we won't label these. So we've got all, I'm just going to do this. We've got all of those rejections, a lot of them. And then you have these rejections, and then 2 weeks ago we had that rejection as well. So you can see multiple rejections on every level. That's what we're looking for to define our support and resistance level. Places where price commonly gives us a wick or commonly reacts, that's what we're looking to define. So now you take all this information that we've provided, right? We've got our support and resistance levels identified on the weekly time frame. And if you trade the weekly time frame, which not many people do, but if you do trade the weekly time frame, then this is all you got to do to identify the support and resistance levels. However, if you trade the daily or the 4-hour or all the way down to the 15 or the 5-minute time frames, you will have significantly more support and resistance levels, because as you drop down in time frames, you'll see that these support and resistance levels are still valid, obviously, because we've identified them on a higher time frame, but we need to then drop down on time frames and identify support and resistance levels that are appropriate for the time frame that we trade. With all of that being said, I primarily trade on the 4-hour time frame, and what I like to do is I go from the weekly to the daily and then try to identify closer to where I'm at as far as trading, so closer to where current price is. I try to identify more support and resistance levels. And so what does that mean? I'm going to identify this level right here as a support and resistance level. Now, this is not something that you would have seen necessarily on the weekly time frame, because there's a significant amount of candlesticks, 7 if you want to be exact, but there's 7 candlesticks a week on the daily time frame that are represented as only 1 candlestick on the weekly time frame. And so we want to set those levels because they're significant to the time frame that we're trading, which, like I said, for me is the 4-hour time frame. And so I will identify those levels because they're relevant for me. And there might not be a lot of levels. That's another thing that you got to understand is we don't want this, when we get to the 4-hour time frame, we don't want this to be every 50 pips is a horizontal line, because that's not an efficient way to trade. But we do want significant levels. And what I'm saying is, you can see that this area right here is clearly an area of consolidation. Well, I want to clearly identify the top and the bottom of the consolidation. You can do that with a box like I did right here, or you could do it with the top of the consolidation and the bottom of the consolidation. And then, as it just so happens, if you go left of where that consolidation box is, those levels, that both the high and the low, have been respected in the past. And so that's why it's relevant. That's why we label these on our charts, is because those things are relevant. Now, you will find some people that trade specifically off of support and resistance levels. I'm not one of those people, but I do put a lot of stake into support and resistance levels because that's where you see the reactions. That's where price doesn't just change just because. Typically what happens is institutional traders, or institutions period, will have significant levels identified where they set orders, and that's what causes price to change direction. That's what causes price, when it's been trending up, to trend down, or if it's trending upward, that's what causes a retracement. And so those levels are important to identify. And so I'm not going to label these necessarily like I did on the weekly time frame, because I don't think that's something that you need to see more than once. But these are relevant. And I'm just going to, for the sake of argument, I'm going to get rid of some of these boxes, because we don't need them when we're actually trading. So we'll get rid of these, and we're going to drop down now to the 4-hour time frame. Now, when you get to the actual time frame that you trade on, you can adjust some of these levels, right? They might not be exact for the time frame that you're trading on, and that's fine. Make some minor adjustments if something looks out of sync. Like, we can move this up, and we can see that by moving that up, we have it lines up better with these rejections, right? We have rejection, 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 rejection. This is clearly rejecting AUD JPY. If you're interested in an actual trade setup, if you take if you're watching this on the day that I publish it, if you draw a Fibonacci retracement from here all the way down to the wick, price is is rejecting the 61.8. So that's something to keep an eye on if you're watching this when I publish it. If you're not watching this when I publish it, well, potentially a missed opportunity. Who knows? That's just something I've got my eye on. JPY pairs in general, I've got my eye on for reversals or continuations. I guess continuation of the trend. But anyways, so yeah, that's why those levels are important. But now we can add levels to this. So there's a level right here. There's also a level right here. And that's pretty much it, it looks like. We can move this just up just a hair. That's all that I'm going to add. I mean, technically, if you wanted to, you could add another level right here, but I'm not going to. So yeah, that's how you draw support and resistance levels, and that's why they're important. If you zoom out, you can see that price moves pretty well from support and resistance level to support and resistance level. And what I used to do, and I don't do nearly as much now, but it used to help me a lot when I was newer at this. What I used to do is I would, sorry, I don't know how long that was out of focus. I don't look at the actual screen very often on this, but what I used to do is I would have the weekly support and resistance level one color, the daily support and resistance level another color, and then the 4-hour support and resistance levels a different color. That way I knew, okay, price is approaching a weekly support and resistance level, and I'd put more stake into that. I'd hold that to a higher regard, and that's still valid. There's still something to be said about doing it that way. It's just not necessarily the way that I go about doing it anymore. And there's nothing wrong with doing that. In fact, I think that it's more beneficial for newer traders to go about doing it that way, or for people that are trying to refine their skills and understand the basics a little bit better, even if you've been trading for a long time. If you didn't take time to learn stuff like this, I'd say it's pretty significant. It's pretty important to the developmental process of learning how to trade. Then you should really take the time to do that, to set the three colors if you trade on the 4-hour time frame like me. Now, if you trade the 15-minute time frame or the 5-minute time frame, you're scalping and you want to use support and resistance levels, that's still valid. And what you can do is you can start on the weekly time frame just like I did, and you can go the weekly, the daily, the 4-hour, the 1-hour, and then the 15-minute time frame. You can mark all of those levels and just change the colors of them. Keep a key somewhere on your chart. That way you know what each color represents. You know how significant each color is, and you can go about doing it that way. That way you can scalp using support and resistance levels if you understand candlestick analysis. It is possible. I do think that there are other things that you need to add on top of it, but I do know that there are a significant amount of traders that just rely on support and resistance levels only. Something else that's kind of neat that I do from time to time is when you're looking at this, when you're looking at support and resistance levels using the candlestick chart, sometimes it can be misleading. So what I like to do as well is just look at a line chart, and let's change the settings so that we can actually see the line. Let's change that to black. Alright, so we look at a line chart instead to see support and resistance levels. Not necessarily easier, but it's definitely clearer, I guess. You don't have all of the noise that you get with candlesticks. And so that's something else that you can add that will sometimes make identifying support and resistance levels easier. Some people it makes it harder. So if this is one of the things that makes it more difficult for you, then definitely don't do this. But you can take a line chart and you can see the movements a little bit more clear because you don't have to deal with the wicks. And so some people don't like drawing support and resistance levels off of wicks. They'd much rather prefer to do it with a line chart, and I have no issues with that whatsoever. I prefer to do it with candlesticks, but I have seen it done this way. So my word of wise on that is, or words of wisdom on that is, find what works best for you and implement that. It doesn't matter what works best for me, because what works best for me is specifically tailored to me. It's my understandings. So you have to identify what works best for you, and that's a lot of trial and error. That's why I always say it's best to start learning on a demo account, so that you have the opportunity to figure out what works best for you without risking your own income, your own money. You're not risking anything by learning how to do this on a demo account. And in all honesty, that's the way to go. You don't want to be risking a lot in the learning phases, because you're learning. You're going to make mistakes. There are going to be hiccups, and that's just part of it. So I think that pretty much covers everything. If you've enjoyed this video, please hit the thumbs up button down below. Subscribe to the channel if you have not already subscribed. And I appreciate every single one of you that have been faithful to the channel since day one. And yeah, so I hope this has been beneficial. If you have any questions, comments, concerns, if I missed something, please feel free to leave a comment in the comment section down below, or shoot me a message on Telegram. My Telegram contact information is in the description down below as well. Thank you, everybody. Enjoy the rest of your evening. I am out.